The key word is uncertainty. There's been a huge increase in trade and economic policy uncertainty. This is having an impact on consumer confidence, on investors' confidence, and also on activity indicators. And if you take this into account and you take into account our own estimations about the impact of tariffs going forward, we revise down almost everybody. It doesn't matter if you are a G20 economy, a non-G20 economy, small or big, almost everybody was revised down, and was exactly because of difficult circumstances and all this uncertainty going forward.
I mean, it does seem that a lot of the uncertainty comes from the U.S. Because this is man-made. Could the reversal come quite quickly?
Well, we do have a scenario. In fact, we take into account the possibility that trade barriers coming down. We think that the top policy priority is exactly to avoid further trade fragmentation. So basically, to avoid increasing trade tariffs, trade barriers going forward. And in fact, to get an agreement, sit down on the table, get an agreement so that we are able to bring down trade barriers. If we do that, we would expect that growth will be brighter than we are forecasting right now. At the same time, there'll be less inflationary pressures. But if we continue to insist of having increasing trade barriers, this will lead to a decrease in growth in the world economy in most countries of the world. At the same time, that will have additional inflationary pressures in the economy.
Yeah. When, because of the downgrade to global economic growth, is this actually the worst slump since the global financial crisis, maybe excluding COVID?
Well, it is since COVID that it has been the lowest growth rate of for the world. It's one of the lowest growth rates since the global financial crisis. Usually, when the world economy was at cruise speed, used to grow around 3.84%. Right now, we're talking about lower than 3%, which means that there's a part of the world that is not growing much, and then that means there is not enough jobs being created, and there's not enough prosperity going forward. So that's why we think it is absolutely essential to get an agreement so that we are able to bring down trade barriers, but on second, to focus on policy to revive investment, which has come down significantly after the global financial crisis. Just to give you an idea, just in OECD countries, investment came down by more than 22% in OECD countries, and for EMEs, the cut in investment was around 33%. So massive decrease, which got even worse with COVID. So reviving investment is key.